Welcome to the BankTalk podcast, the show where we talk to leaders and experts from the community banking sector. Whether you are a current CEO or aspire to be one, this podcast will give you valuable insights and advice on how to run your financial institution better. Each episode features a different topic and a guest who shares their experience and knowledge with us. Tune in and learn something new with BankTalk podcast.
Hi, and welcome back to Bank Talk. I'm Jordan Kelly, your host and consultant at Remedy Consulting. Today, we're talking about wealth management as an investment opportunity. And we're talking with Anne Schutt from Midwestern Securities. Anne is going to talk to us about what her group does and what they're seeing in this space. So without further ado, let's dive into our discussion. Welcome back to Bank Talk. We are sitting down with Anne Schutt. Anne, welcome to Bank Talk. Thank you so much for sitting in with me today.
Lord, thanks so much for having me.
So Anne, can you give me a little bit of background about yourself? Tell me about yourself. Tell me about Midwestern Securities. Let's just dive right in.
Yeah, sure. Absolutely. So a little bit of background about myself. I spent almost 20 years in the healthcare industry and then actually transitioned over into the financial services industry. So my recent background before coming to Midwestern Securities was as a financial planner. So I'm a CFP. And so I've been in the seat and I've sat where many of these planners that are out there are sitting today, really help people meet their goals and get them that peace of mind that they need in their long-term planning. When I learned about Midwestern Securities and decided to join this team, I was pretty excited because a little background on Midwestern Securities is that it started, it'll be 25 years ago next year. Our CEO, Mike Graham, he is a financial planner as well. So he's a CFP. He has a financial planning company called John Graham and Associates that he formed with his father. And, at the time he was 26 years old. They just had the financial planning firm side of the business. And they were super frustrated on how they were being treated by their broker dealers. And they said, we're just being treated like a number. We're not getting good response. It's really inhibiting our ability to be successful in our business. And so at 26, he said, I think that if these guys can do it, we can do it too. And so he decided to start his own broker dealer. And that's where Midwestern Securities was born. And it really was just started to serve their financial planning firm. But then about 5 years in, so about 20 years ago, community banks started getting interested and saying, we too feel like we're unique and we're not one of the big investment firms, and the broker dealers really aren't giving us extra attention and customized solutions for us to be successful. And so we started working with community financial institutions.
Thank you for that background. I appreciate it. I think it's always good for our listeners to understand who we're bringing on, what your background is in this space, so that they understand the expertise you're bringing to the table. And so that when we talk about these sources of investments, you can add a little bit of flavor to it because you really have that experience and that background.
Absolutely. And that's what we do on a daily basis is, we are helping the financial advisor programs in these institutions so that they're building sustainable, growth-focused, kind of future-focused financial advisor programs that are going to be attractive to the next generation as well. So help capture and deepen the roots with their current customers, but also are going to really attract the next generation because, if you think about it, Jordan, the great wealth transfer that is happening right now, I think it's $84 trillion over a 20-year period is going to transfer generations. The majority of that 68 trillion, I believe, is going to transfer to the millennial generation. And so really, you've got to have a strong financial advisor program that is going to truly offer what the future wants and needs. And that's what we really help these community banks and credit unions do.
And be ready to deal with that influx that is coming, is both underway and on its way.
Exactly. And also it's almost a defensive move as well, because those deposits, right, are now at risk of being pulled out of your bank and going somewhere else, wherever that next generation has the relationship and has the comfort and that really deep relationship. And by having a strong financial advisor program, you can really get some of those deep relationships that they're looking for that are going to, one, help maintain deposits, keep those deposits, and then also attract new deposits as well as new customers gravitate towards your financial advisors.
Well, and as we all know, truly the stickiness of those relationships is what's important for the longevity of it. So that's
Absolutely.
exactly what you're talking about here.
Absolutely. And it's one of those, a lot of times when we talk about this as a part of non-interest income, right? So
Right.
we've got fees. A lot of the non-interest income in a bank comes from fees, but this is a way that you're also generating non-interest income. Now, is it ever going to, give as much as your spread, your NIM, right? You're not going to generate as much, but unless you're a very small bank, it's possible. But what it can do is deepen those relationships so it can protect part of the other part of your business, and it can lead to other growth areas as well, because you've got cross referral possibilities as well to mortgage, car loans, things like that from the financial advisor. So it's a really, I think, crucial piece that is missing in a lot of places. Either they don't have a program, or maybe they have a program that's not really designed with that kind of future focus in mind.
So, Anne, on Bank Talk, we've discussed investments in the past and unrealized losses. But tell me a little bit more about what you're seeing here in this space in terms of, is it getting better, or are a lot of the community banks still struggling?
So, while the interest rates are still high, there's still going to be a struggle, right? So we think of back when COVID happened and all this COVID cash flowed in, and we had everybody was seeking these safe deposits. And so the money was flowing into the banks, and the banks are like, what are we doing with all this money? So a lot of times they put them into these longer term government-backed securities, right? They put them in these bonds. So now they've got these books that have these unrealized losses on them. But as interest rates start to come down, it's going to help that situation. But we're not there yet, right? We still have this situation which is causing a risk with liquidity. So if if there's a great liquidity need, it's like, oh my goodness, what do we do now? Because we can't do anything with it. It still is there. I think we're moving in the right direction, just because as interest rates come down, now it takes time, right? I saw an article recently on American Banking Association page that called it that our bank balance sheets have long COVID, right? Like there's some long-term effects from what's
Absolutely.
happened. That's why diversifying, other parts of the balance sheet through these non-interest income methods is so important. And unfortunately, some of the other fees that they have the availability to utilize to grow some of that non-interest income are coming under scrutiny. So there's a lot of regulations and things that are putting the
Right.
fees under scrutiny. So it's kind of limiting their nimbleness on the fee side. And so they're looking for ways to really diversify that part of their balance sheet. And by doing it through adding a strong financial advisor program, it can be really important, I think, for a lot of these banks.
So you know what, you're leading me right into my next question here, because what I wanted to ask you is take it a little bit back to the basics, but tell me a little bit about non-interest income. What are some of the key opportunities that are out there to boost non-interest income?
Obviously, like the mortgage origination fees, and there's a lot of these different fees, insurance products. So that kind of falls under our wealth side. So when you think about retail wealth management, which is our umbrella that we work within, that's where our expertise is, and that's what we do the most with. But within that, we're finding that a lot of banks are really trying to build that out so that they're what you would call kind of the community financial oasis. If you think about the way people think of healthcare in a community, they think of their hospital system, their doctor, right? If they have an issue, they go to the hospital, into the hospital system. So a lot of banks are trying to really build this out so that they're that kind of wealth care place, right? Where if there's an issue, a concern, a need, the first place they go to is their community bank. And they can do that. And what they can build out then within that to drive that on non-interest income is, one, the financial advice. So the actual financial advisor. But the important thing is how they build it, because there are different ways to build a financial advisor program. And unfortunately, banks in the past have historically gravitated towards a financial advisor program where they're just selling annuities, mutual funds, kind of commission-based sales that are kind of one and done. It's not predictable. It's not recurring income. It has to be recreated every single time. Not always maybe in the best interest of the clients. But if you do an advice-driven plan where you now are doing, say, an asset under management model, so you have investment accounts, you do full financial planning with your clients, and then they pay you an asset under management fee, it's predictable, it's recurring, and the bank is building a book of business that they own. That is an asset. Now, it's not tier one capital, right? It can't be used for some of our important ratios, but it still is an asset that the bank has that at some point, if there was a liquidity crisis, they could sell, right? Raise some money. Hopefully we don't get to that, but if it's there, it could. But then also within that kind of that wealth management umbrella, you've got the trust side, really making sure you're building up your trust services so that you're capturing some of that familial wealth that's out there, connecting with the next generation, insurance products. So people need insurance. So what insurance products are being offered? Estate planning and tax. Those are also areas that we're starting to see that trend where banks are starting to try to bring all those in-house so that no matter what the need is, the bank is the first place people go. They come into the bank, they have a need, whether it's a mortgage or whether it is a health, like life insurance, or whether they have estate planning questions or they have tax questions. They're thinking of the bank first and they're coming in and the bank is that solution for them.
So give me Midwestern Securities side of this. Tell me a little bit about how wealth management and Midwestern Securities functions as a partner to some of these banks.
Absolutely, because we're a little different. We're what we call a boutique broker dealer. We're also a registered investment advisory firm and a master general agent. So we can help them manage all the investments, whether it's just a purchase of a product or a managed account, or they need some sort of, life insurance, disability insurance, et cetera. We support the financial advisors. So we have two different models, I will say, because we're very custom focused because we know every community bank is different in what they need. So the two models, the most prevalent model that almost all of our partners right now utilize is where they hire the financial advisor into their bank as an employee of the bank. And then they contract with us. So the bank signs a contract with us. And then we have a 1099 contract with the advisor. And then we do all of the program management support for the advisor. So all of the HR things, the benefits, things like that are provided by the bank because we really want that advisor to be a part of that bank's team. It's very crucial that they are part of that bank's team. And then the bank basically has a revenue share agreement with us. So depending on how much revenue they generate, they get a certain percent of the revenue that goes to them. And then part of that goes to the advisor to pay the advisor based on their what they've earned. And then Midwestern Securities gets a portion of that revenue as well to cover our expenses on our end. And so it's really a nice model because the book of business belongs to the bank. We white label, everything is the bank. So it's, we have to be in all the disclosures and things like that for legal reasons, but everything is titled, the wealth management division has the bank's name. It's all about the bank. We have marketing packages that we provide as well, so we can help them with all their marketing around the program, et cetera. Sure. And so it's a really comprehensive, and then we do all the compliance oversight. So we are the OSJ, the Office of Supervisory Jurisdiction. We make sure that all of the advisors are doing everything compliantly so that it protects the bank, so that the bank's not at risk, because right now we're seeing a lot of things with advisors out there that don't have great supervision, or they're doing things they maybe shouldn't be doing that puts the bank at risk. Maybe it's legal, but there's also a lot of things that could go wrong with it. So scrutiny. Yeah. And so there's some gray lines with things that really, we are very much more conservative with, there are certain things we don't allow, certain products that we do not allow advisors to do just because we know the high risk of them and that it doesn't align with our bank, because our bank's reputation in the community is everything. And we understand that. And we're not going to have an advisor do anything to jeopardize the bank's reputation in the community. So that's one model. The other model is where they are actually an employee with us. And then we have them located at the bank. Maybe it's not full time. Maybe they don't need somebody full time. They just want somebody to come in a couple days a week, or it is full time and they're there full time. but they're an employee of ours. But then we own the book of business and we give them a revenue share off of it. So
Okay.
it's not, it's a fit for some banks that, that maybe don't want to go all in, but we much prefer the other way where the bank owns the book of business, the bank has the advisor, and it's a really nice way to build that non-interest income for the bank.
Well, and one thing that I heard from you that I thought was interesting and also kind of just really an important part of that of what you bring into the bank is helping them even on the I guess on the marketing side, really making sure that their community is aware that they are that one-stop shop for these pieces and the place to go when their community has questions.
Yeah. And that it's done compliantly. So we have systems in place. Like if you see the headlines, I mean, there's so many investment companies that are getting fined for things like unmonitored text messaging and social media things and just crazy stuff. We have systems in place. We monitor everything so that what they're putting out there is safe and it's approved through the compliance department so that yes, we want the marketing out there. We want their names out there, but we also want to make sure that it's gone through a level that to kind of do that spot check. Hey, let's make sure that what we're putting out there aligns with the bank and the bank's reputation, but also is something that's not going to backfire and come back on, get that advisor in trouble or get that bank in trouble.
Absolutely. Absolutely. Let me ask you this question. This is in your wheelhouse, but I would say maybe just a step outside, which is how would you recommend a bank start by building a wealth division if they don't have a partner? Or what is that first step that you would recommend they consider?
Yeah. Well, the first step would be, reach out and start building relationships with a broker dealer like us or another one, but start with that process of just start the conversation. When I first go into a bank that does not have an existing program, because we have kind of two ways, either it's a bank that has an existing program that maybe they want to improve, make more profitable, grow that non-interest income source. And they want us to come kind of take over as the broker dealer and help get them going in the right direction and grow them. Or if they don't have a program, then it's kind of more, okay, now let's kind of start with, let's talk through the conversation. Let's talk through why you want to do this. And now let's talk through, bank leadership has the board, let's talk about the board, is the board interested in this as well? And, what do we need to provide to the board to make sure that the board is also in agreement with this? And so it's more of a baby step, slower start when you don't have a program. Sure. But then it's as simple as now let's find the right person. It's find a financial advisor, find somebody that's going to be a great fit. They're going to align with your bank and they're going to be somebody who's ingrained in the community knows and trusts. And they don't necessarily have to be an existing financial advisor. Some of the best financial advisors that we have with our company right now never started out as a financial advisor, but they're trustworthy, they're known in the community, and they're smart. And so we can train them and they can learn everything and they've got us to help them and we train them and teach them. And then they come into the bank and then they start to build that program for the bank. And we hold their hand the entire way to make sure they have all the resources that they need to be successful. It's really just kind of that first step is starting that conversation to learn more about it. And then kind of making sure that all the leadership and the board all agree that this is something that the bank should do. And then it's now let's look for that right person. And once we have kind of that trifecta, then we can really just kind of start, okay, let's put a contract in place and let's get started.
And help it really take off once you have those building blocks in place.
Absolutely. Yep.
Well, Anne, thank you so much. Tell me, what did I miss in asking you about this today? Because, when I think about what our listeners really care about, they care about the space, they care about both the, the very specific advice, a lot of what I think we talked through today, and they care about what's happening in the, on a larger scale, in the big picture. I think we talked about a lot of that, but what else is there that I have not asked you about yet today?
Well, you've asked some great questions. So I don't know if there's anything you haven't asked, but I will say I was recently presenting at a CFO conference in Texas. And one of the other groups, they'd had a panel discussion. And one of the CFOs said, if somebody goes down the road to another bank chasing an interest rate, because, maybe there's a CD rate that's 0.25% higher, whatever, he said, I'm not really worried about losing that customer. They'll come back. I'm their primary banking relationship. They'll come back. But if they go down the road to Edward Jones, they're gone forever. And so he recognized those deep relationships that are being formed. They're doing it in the financial advice space. And having done that myself, I can tell you, I knew everything about my clients. And I don't know how many times people asked me, do you have banking products? Because I was their trusted financial relationship person.
Absolutely.
And they wanted as much to go through me as possible. Now, I don't know if you're watching what's happening in the industry, but a lot of these investment companies are partnering with some of the big banks to offer banking services, including Edward Jones just released that as well. So you've really got to be thinking about that future and thinking about, okay, is this going to is this going to outdo the income that we're getting from that spread between our loans and deposits? Maybe not if you're a big enough bank. But is this a deep relationship that we need in order to keep our customers here in our bank and not going down the road to one of these other places where they've got a stronger relationship and somebody that's really helping them meet their goals and get them to that financial peace of mind that they need to be at. So that's just my final thoughts, I guess, on that are just, the future is happening and it's happening very rapidly and it's around this space. And people are very, very hungry for financial health, for help. There's lots of data out there to show that, lots of people, the number one thing they want from their financial institution is kind of that steady hand, that person to give them that relationship and help with their goals and a very small percent actually feel they're getting that from their financial institution. So we've got to get away from being product driven and be more service advice driven. And that can really blossom with a really good financial advisor program.
I think what's interesting about this is that we know, the banking community knows that trust, it has a value attached to it. I think it's always been incredibly difficult to truly identify what the value of that trust is. And what I think is interesting about this is that what I'm hearing from you is that this is a very tangible, specific way to build that trust and then build it over a long term into those really deep rooted relationships that you're talking about. So, I really appreciate you bringing this up and sitting down with me today, because I do think I think it's very impactful for the community that we serve.
Yeah, I think so too. So I'm really glad to have this ability to have this platform, just because we care about these community banks and we want them to be here. If they want to be here 10 years from now, we want them to be here. And we want them to continue to provide what they provide to their communities, because we know they're so important. So anything we can do to help with that, we want to do.
Wonderful. Well, Anne, thank you so much for joining me today. I appreciate your time.
Yeah, absolutely. Thanks so much, Jordan.
No problem. That's it for Bank Talk. Keep learning, and we'll talk to you again soon.
Thank you for listening to the Bank Talk podcast, brought to you by Remedy Consulting. To reach out to Anne at Midwestern Securities, go to midwesternsecurities.com. Thanks again, and we will see you in the next episode.